Today on the Blockchain Report, Bitcoin's down to 110K, and it might be because Wall Street thinks the Fed is about to cut rates in September because Jerome Powell suddenly discovered that unemployment rates are still very much a thing. Trump just fired a Fed governor for claiming 2 primary residences because apparently time travel isn't a legal mortgage strategy. And Bitcoin now makes up 1.7% of the world's money supply, proving magic internet money is now officially a line item on fiat's balance sheet. All that right now. Let's go! Good morning and cowabunga, my digital dudes and dudettes. Welcome back to your daily guided tour through the financial funhouse that we call the Blockchain Report. I'm your host, Hank Hudson. Yes, it's Tuesday, and before we swan dive into today's Bitcoin circus, let's do what we always do and do me a favor and hit that like button the way you hit Remind Me Later on a software update that's been haunting you since 2022. And make sure you're following RoxomTV and yours truly at Hank at RoxomTV, where the takes are hot, the memes are free, and unlike Coinbase, we won't crash the second that volume spikes. Now let's stop stalling and take a deep breath. Whew, and take a peek at what the markets are serving up in this morning's market rundown. Let's go. All right, let's see how things are looking today. Will I be putting that down payment on my submarine anytime soon? No, probably not. Not looking great, but not terrible either. Right now, we got Bitcoin hovering right above that 110K range. As you might remember from yesterday's show when I was here with the big beat himself, he said that 110.5 is looking like that support level right now. So we're going to keep an eye on that and see if we're due for a bounce here in the not too distant future. Ethereum coming back up this morning. It's currently sitting just beneath $4,600 a pop. It was all the way down to about $4,200 yesterday, but it looks like the tides might be shifting. Vitalik and Mudang are loving it. XRP sitting about $2.94 a coin. Cardano is up nearly 2.5% this morning. And Dogecoin is also up 2.5%. Never to be ignored, but for nothing to be expected of, because I still don't understand what Dogecoin does. Next up, we got in TradFi. The Dow Jones is currently sitting at about 45,260 right now. The Nasdaq's up about 28 points this morning. The S&P is up nothing, pretty much standing pat. And no other big movers or shakers in TradFi. Well, we got a lot to do today, including our first guest of the day who is laying in wait. So let's run the stinger and get to it. All right, welcome back to this morning's Bull Run, where we go over the top stories of the morning. And today we are going to be joined by a special guest. Now, this guy is the guy that institutions call when they need to make sense of Bitcoin without looking like they just learned what blockchain is from their nephew at Thanksgiving. He's a PhD in financial history, which basically means he can explain both 18th century gold standards and why Bitcoin eats gold's lunch. At Bitwise, he leads research across Europe, helping family offices, banks, and wealth managers stop treating Bitcoin like a side hustle and start treating it like a serious asset class. With that in mind, let's give a big Blockchain Report welcome to today's special guest, the Director and Head of Research at Europe at Bitwise, Andre Dragos. Hey, Andre, welcome to the show. We are so thrilled to have you, and so is our audience. How are you today? Thank you for joining us.
Thank you so much. Yeah, I'm very well. Thank you. Thank you for the invitation.
Yeah, absolutely. And I believe you said, we talked briefly before the show, you're coming to us from Frankfurt, Germany, huh? So what time is it over there? It's like 5 o'clock, 6 o'clock?
5 p.m. exactly. Yes.
Oh, man. Well, we're just getting up and you're ending your day. So we certainly appreciate you joining us this morning to chat and talk about some of the top stories.
Now, I'm quite used to it because I'm quite used to it because some of my colleagues are also working from the West Coast, San Francisco and Los Angeles.
We're hopefully not Oh, nice. So hopefully we're not keeping you up too much. Yeah, we've actually had your CIO, Matt Hogan, join us in the show before. He's great. So the expectations for you are also very high. And you can thank Matt later because we really enjoyed having him on the program. Now, before we get into the top stories of the day, Andre, for those in our audience who may not know you yet, can you just give us the quick version of who you are and what you do over at Bitwise?
So very short. So I'm European head of research at Bitwise. I'm leading research efforts in Bitwise, so I focus most of my day analyzing Bitcoin, right? Also other major crypto assets like Ethereum, but like it's mostly Bitcoin, 90% of my work. And we have a small team of around two additional analysts in Europe, but I also collaborate with US colleagues, research colleagues like Matt Hogan, right? And yeah, we are part of the bigger Bitwise family in the US and Europe, which already manages around $15 billion in assets, mostly in ETPs, right? Exchange traded products like ETFs as well. We have one of the biggest US spot Bitcoin ETFs with above $5 billion in assets. And yeah, that's my job.
Well, we appreciate giving that backstory. Certainly not a small chunk of change you and the gang over at Bitwise are managing. So we're super excited to have you and your expertise with us on the show today. And we got a lot of top stories to talk about, and you and I are going to jam on those in a second. But for now, just stand pat there for a second, Andre. We're going to come right back to you and chat about them. Sound good?
Yep.
All right, rock and roll. First up, this morning, Morgan Stanley has officially joined the Cut Rates Now choir. The brokerage now expects the Federal Reserve to slice interest rates in September because apparently Jerome Powell went to Jackson Hole, looked at the labor market, and decided that unemployment finally matters more than inflation. Morgan Stanley says Powell's tone marked a real pivot. This is the same Fed chair who couldn't stop lecturing everyone about inflation persistence and how the job market was too strong. Now, well, he's suddenly worried about downside risks for workers. And the street heard it loud and clear. Morgan Stanley now forecasts 225 basis point cuts this year, one in September and another in December. That's a big shift from their old forecast, which assumed no cuts until March of 2026. Followed up by a chainsaw massacre of more aggressive moves. And oh, there he is! Get out of here, Elon! No, Powell's softer tone triggered a stand.
Yes, I think so too. Yeah. No problem.
right, and we're back. Andre, and to the family out there, I apologize. We had this bird that got in the studio a couple weeks ago, and he's been living in the walls, and I think he brought friends and just been wreaking havoc in here. We got to get an exterminator. But we're bringing Andre back because we want to talk about this story. So, Andre, thank you for your patience on that one. I apologize. But
No
let's get
worries.
to the news here. Morgan Stanley. They now think that we're going to be getting 2 rate cuts this year and then steady trims throughout 2026. Do you think this is the Fed's way of actually pivoting, or is this Jerome Powell realizing that unemployment is a little less fun when it's real people and not just a chart that he looks at? What do you think?
So, I mean, since the Fed started cutting rates, I mean, we have to look back what happened already, right? The Fed already started cutting rates in September, right? They delivered 3 rate cuts, but then they paused in December, right? For whatever reason, right? There might be political reasons, whatever, right? But they just paused. That's just a fact, right? And meanwhile, we've actually seen that both inflation and labor market data in the US have actually deteriorated even more, right? Labor market data surprises, inflation data surprises have continued to surprise to the downside, right? I mean, apart from the most recent producer price inflation data print, but like overall, like if you take a bunch of the major data releases, inflation and labor market data release, they've continued to surprise to the downside. So the case for further rate cuts since December, since the Fed actually paused cutting rates, has actually strengthened even more. So my personal base case is, or my personal thesis is, the Fed remains behind the curve. And if you take like a standard Taylor rule that just looks at U3 unemployment rate and core inflation, right? I think the Fed funds target rate should be around 50 basis points lower than today. So they definitely need to do something, in my view. And talk about the outlook for employment data and inflation data. I mean, you can make the case that like headline inflation is moving up because of tariffs, right? Because of base effects and so on. There's some drag from housing, from rents, and so core inflation data are actually still decelerating. But like if you look at leading employment data, they actually suggest that the labor market is still weakening, right? So if you look at the spread between jobs plentiful minus jobs hard to get in the Conference Board survey, consumer survey, it actually suggests that the employment rate will likely continue to move up, right? And so I think if the Fed is now focusing on labor market data instead of like is focusing more on labor market data instead of inflation data, I think the case for more rate cuts will even strengthen in September and beyond. You know.
Yeah. I mean, Donald Trump has been calling him too late Powell for a reason, so it sounds like he's finally getting on board the train here. And as you and I know, for Bitcoin, cheaper money is basically confetti falling from the ceiling. Do you think a new easing cycle turbocharges Bitcoin's hard money narrative more than in the past?
I think it does because of the following reasons. So why are Fed rate cuts even important for Bitcoin? Right? The mechanism or like the transmission mechanism, how it usually works is so the Fed can control the short end of the yield curve, right? Of the interest rate curve. So the moment they start cutting rates, what usually happens, you see a steepening in the yield curve, right? And this usually tends to incentivize bank lending and money supply growth. So money supply growth usually accelerates with the steepening of the yield curve. And we know like Bitcoin likes higher money supply growth, higher monetary debasement, right? And we also know like global money supply is already at all-time highs, right? We know Chinese money supply is accelerating. We know US money supply growth already accelerating. If the Fed continues cutting rates, even more so. And I think that case that strengthened the bullish case for Bitcoin from a pure macro perspective. And so, yeah, I think it's bullish for Bitcoin.
Yeah, absolutely. I mean, if the Fed keeps cutting rates into 2026, we could be down back around that 3% mark. And if that were the case, do you feel like we're setting up for a multi-year liquidity wave that cements Bitcoin as kind of the ultimate macro hedge?
So what we've seen so far is we've seen this expansion in global money supply, right? We've seen new all-time highs despite this Fed pause and so on, right? But what happened in the meantime, since the Fed stopped cutting rates in December, is like the ECB delivered more rate cuts, right? The European Central Bank, the Bank of England delivered more rate cuts. Swiss National Bank, one of the major central banks in the world, delivered more rate cuts, right? And continued to ease monetary policy. And what we've seen is so this increase in global money supply, but also if you look at the aggregate number of rate cuts over the past 12 months, right, across the globe, it's the highest it's ever since subprime, essentially. So since 2009, apart from COVID, of course, where you had like the highest monetary stimulus, but apart from COVID, we have seen the highest number of rate cuts globally and also the strongest acceleration in liquidity growth. So I think it's setting up Bitcoin for a multi-year run potentially because what we're seeing in the data is that actually supply factors like the halving deficit, right? That deficit induced by the halving, which is around 164,000 Bitcoins per year, is becoming less important, while demand factors by ETPs, Bitcoin treasury companies, and so on is actually outsizing this effect by a very wide margin, right? It's around 5 times bigger, right? And what influences this kind of demand factor? It's the macro cycle. And if you assume that like the macro cycle, the business cycle is rather at the beginning than the end, right? Because the Fed continues to cut rates and so on, which tends to prolong a business cycle, right? So I think we're probably rather looking at an extension of the bull run than a cycle top, because I think the majority of analysts still believes we'll see the cycle top in Bitcoin over the next 2 to 3 months based on like historical patterns. But I think we'll probably see a break of this pattern because the macro cycle and the institutional demand cycle is becoming increasingly more important.
Yeah, and I mean, I think that's been echoed by your CIO, Matt Hogan, who was on the show, and he mentioned that he thinks that the cycles as we've known them in the past are kind of going to be a thing of the past. We have all this institutional money in the market now. We have governments jumping in and testing the waters in Bitcoin. So are you in agreement that we're at this new phase or inflection point of Bitcoin's maturation process where cycles are going to be kind of a thing of the past, and there's going to be a lot of other factors at play that determine Bitcoin's price rather than just these 4-year halving cycles? I mean, the majority of Bitcoin that will ever be available has almost already been mined.
Exactly. And I think that's the big difference between today and like 2012 or 2016. Like if you consider the size of the halving deficit relative to supply, for instance, during the first halving, right, which was in 2012, right? So the first halving saw a reduction in supply per block of 25 Bitcoins, which was around, I think, 12.5% of the existing supply, right, back then, because you only had 10 million coins. And that relative supply shock induced by the halving has actually declined over time with every new halving since 2012, right? And if you look at the very last halving, the latest halving in 2024, the reduction supply per block was 3.125 Bitcoin, right? Which is less than 1% relative to the existing supply in circulation. So that effect is actually relative to the existing supply is becoming less and less important. And that's why the halving effect is becoming less important. And it's probably also the reason why we've seen these diminishing returns each cycle, because like the halving effect is becoming like less important. But what we've seen, especially since 2024, since the onset of spot Bitcoin ETFs, we saw new all-time highs before the halving, which was unprecedented. And I think that alone speaks volumes in terms of like the shifting dominance, right? So we're seeing this kind of shifting dominance from supply factors halving, let's say, to demand factors, right? To institutional demand,
Hmm.
ETPs, ETFs, right? That have been by a magnitude higher than the supply deficit. And so, yes, I think that's the halving itself is definitely becoming less important.
Yeah, I mean, I think we are really in the midst of entering a whole new era of Bitcoin. And if you're paying attention, it seems pretty clear to all of us out there. And I'm glad you mentioned ETFs because that's what we're going to talk about next. So stay tuned. We're going to be back with you in just a second, Andre, because in the second quarter of this year, institutional Bitcoin ETF inflows hit $33.6 billion. Most of that came from investment advisors, hedge funds, and brokers. It is another sign that Bitcoin is no longer being ignored in boardrooms. Investment advisors took the lead. They now hold $17.4 billion in Bitcoin ETF positions. That is nearly twice as much as hedge funds, which are sitting at about $9 billion worth. Now, advisors have embraced ETFs as a way to get Bitcoin exposure without touching the asset directly. Brevin Howard Capital Management stood out by increasing its stake in a major Bitcoin ETF by 71%. That brought its total position to roughly $2.3 billion. Harvard's endowment also made headlines by adding $117 million. That put its Bitcoin ETF exposure ahead of its holdings in gold. This shows where all the confidence is lying currently. Growth happened across institutional categories. Brokers moved up fast, hitting $4.3 billion in holdings. That placed them second only to advisors. Banks, well, they got in on the action too, though at a smaller scale. They added about $655 million worth. The only group that stayed flat was pension funds. They held steady at just over $10 million. Even with the growth, institutions still only account for about 25% of total money in Bitcoin ETFs. Retail investors still hold roughly 3/4 of that pie. Now, despite the rise in institutional interest, Bitcoin is still rooted in the hands of individual investors. This is not only about more money flowing in, it's about how institutions are starting to view Bitcoin. For many, Bitcoin is becoming a long-term allocation alongside equities, bonds, and real estate. ETFs gives them a clear way to gain exposure without worrying about wallets or keys. Now, the rise of Bitcoin ETFs has made it easier for traditional players to get involved. They do not need to change how they operate. They can use the tools that they already know. That convenience is helping fuel the flow of inflow fires. Now, global markets, they still remain a little bit shaky. Inflation concerns keep bubbling up. Looking ahead, though, the next few months could bring even more movement. If traditional markets hit turbulence or if interest rate guidance changes again, institutional demand for Bitcoin ETFs could spike. Retail traders will keep playing their part, but institutions are getting much, much louder. We're bringing Andre back. Andre, $33.6 billion in one quarter is a massive inflow into the Bitcoin ETFs. Are we finally watching Bitcoin move from weird experiment to a core institutional allocation? What do you think?
Yes, I think you've mentioned financial advisors, right? And the survey Bitwise has been doing with Verify actually confirms this. So financial advisors, the share of financial advisors who say like, we've invested into crypto assets has been rising, right? Steadily rising. And the last data point per the end of 2024 suggests like 22% of financial advisors are already allocating to crypto assets, including Bitcoin, Ethereum, and others. So that share has been rising. And also the percentage share, portfolio share, the allocation has been rising. So it used to be around 1%, right, of the whole portfolio, but it's now rather moving towards 1 to 5%, right? So that share has been rising.
Mm-hmm.
And if you look at endowments, I think their allocation, their relative allocation, tends to be even higher, right? It tends to be between 5 and 10%. I mean, in general, if you look at all kinds of optimization, portfolio optimizations, you'll actually get an answer to what's the optimal allocation to Bitcoin, right? In a multi-asset portfolio. And it depends actually on the optimization technique. You have different kinds of statistical optimizations, right? Like risk parity or max Sharpe ratio or min variance. But like all of these optimization techniques, they actually suggest somewhere between 2 and 3%, right? But I think as Bitcoin matures and as like adoption grows, institutional adoption grows, um, this tends to dampen volatility. And I think with this kind of structural decrease in volatility over time, over the medium to long term, you'll actually see higher allocations, which makes sense even based on these kind of statistical portfolio optimizations.
Yeah, that makes a lot of sense. And we're seeing it very much during this quote unquote cycle that we're in, as volatility for Bitcoin has been, I believe, less than it has been for the NASDAQ, or I think even the S&P at certain points this year. So we're certainly seeing the waters tread a lot calmer than we had in cycles past. And even with all of these inflows that we've been seeing, institutions are still only 25% of ETF assets, while retail still seems to run the show at about 75%. Do you think that balance flips someday, or will Bitcoin always stay retail driven at its very core?
So if you look at traditional ETFs, like the SPY ETF, right, SP 500 ETF, which is the major SP 500 ETF in the US, the share of institutional holders is significantly higher, right? It's close to 50%. And if you look at corporate bond ETFs, sovereign bond ETFs, the share is close to 80%, right? Which is like the complete opposite. So yes, I think that share between retail and institutional will shift towards institutional because we're seeing it higher in all these traditional ETFs already. So if you assume that like Bitcoin becomes a mainstream asset, which is also our thesis, right? Will be in every portfolio in the future. So if you assume like Bitcoin becomes a major mainstream asset, so that percentage of institutional holders should actually converge towards 50%, even higher, right? Yeah.
Yeah. I mean, it makes me think we still have a lot of room to run. I know people were so used to those high alpha plays of the 20 teens, but slow and steady up and to the right, especially if you look at the, is totally fine by me. And that's the way Bitcoin has certainly always moved. So great to get your opinions on that. Now it is time, Andre, for our deep dive where we're going to get into your background and talk shop. So let's run the stinger, boys, and get into it. All right, we're back with our deep dive with Andre Dragosh of Bitwise. Now, Andre, I want to get a little bit into your background a little bit. You're a super interesting guy. You've got a PhD in financial history, which sounds like you were basically trained to tell us why every bubble eventually pops. How did that academic background lead you into crypto and eventually Bitcoin? What was your orange pill story like?
So I think the advantage from my PhD studies is like you get to know financial history, of course, and in my case, you study like the banking system, right? How the banking system works, how money is created. You have to find out where money is coming from, right? Like these essential questions. And the more you know about like our modern fiat monetary system, I think the more bullish you become for Bitcoin, right? Because I think in order to understand the utility of Bitcoin, you need to understand the monetary system first. Because I think if you ask an average guy on the street how like the monetary system and the banking system operates, they'll probably tell you something like, most of the money is printed by the government, right? Or maybe central bank. But the truth is, the majority of the money supply is actually created in the commercial banking system via bank lending, right? It's created out of nothing with every extension of a loan, right? For real estate, for any kind of stuff, for consumer purposes. So that's actually the advantage of doing a PhD, because you get to do a deep dive on like how the monetary system works. And I think what also many people still don't get, unfortunately, is like the utility of Bitcoin is not that it's like a new kind of PayPal, right? It's not primarily supposed to be a means of exchange, right? It's, I think, primarily supposed to be a stored value, but also like this combination of being a superior means of exchange combined with the stored value characteristic, like that's making Bitcoin special, and that's the innovation of Bitcoin. So it's like a PayPal combined with gold, digital gold. Some people call it
Right.
digital gold for that reason, and that's the innovation of Bitcoin. And I think if you don't understand where money comes from, it's hard to understand the utility of Bitcoin, but I think we're slowly getting there.
Yeah, absolutely. And we're thankful we have well-educated people like yourself helping people understand how to get there, because it seems like there's a lot of folks out there that are still having a hard time wrapping their head around why it's important. But we're all doing our best to kind of orange pill the world one person at a time, including what you guys are doing over at Bitwise, which I would love to talk about now, as you all manage over $10 billion across crypto ETFs, ETPs, and private funds. Now, for some people in our audience who only know Bitwise as that math thing they forgot after high school, how do you explain what Bitwise does in just a few sentences that anybody could understand?
So Bitwise is a crypto asset manager. So we manage around 15 billion US dollars in assets under management in so-called ETPs, exchange traded products, which includes ETFs, exchange traded funds, which are regulated securities traded on traditional exchanges that have 100% um, Bitcoin or Ethereum or any other crypto asset as underlying, right? So you can trade Bitcoin like a traditional security, and it's 100% secured with the underlying Bitcoins, right? And what we also do, uh, which is also special among any kind of crypto asset manager, is we do publish our on-chain addresses, especially for Bitcoin and Ethereum. So you can always check whether the underlying holdings in the ETP, in the ETF, are really there. You can check it on chain, right, on the blockchain. And so, yeah, Bitwise is a crypto asset manager, and we manage around 15 billion assets under management in combined, right, across the whole group in both US and Europe.
Awesome, amazing. I appreciate that breakdown. I think everyone at home got that. You guys were listening, they got it. So, Andre, you're currently the head of research for Europe at Bitwise. What does that actually look like? Is it spreadsheets, charts, and caffeine, or is it more like convincing regulators that Bitcoin isn't a Ponzi scheme? What is your day-to-day like?
So it's definitely lots of caffeine.
Yeah.
But yeah, my
I bet.
day-to-day looks like and not so much spreadsheets, but lots of R scripts and coding, of course, analyzing data, on-chain data, but also like traditional financial data, macro data, mostly Bitcoin because it's the dominant asset, but also Ethereum, Solana, and others. But yeah, our main job is to write reports essentially about market developments. We have a weekly report, a monthly macro focus report, but also ad hoc reports on like important developments, ad hoc developments, which are called espressos. So we publish a bunch of our espressos and reports, and also deep dives on like single tokens. We collaborate with the colleagues, research colleagues, on bigger deep dives and reports, such as the very latest report about Bitcoin long-term capital market assumptions, which is like a piece about the expected returns for Bitcoin over the next 10 years. So it's definitely worth reading. And yeah, that's what we do.
Love it. You're doing God's work over there. And correct me if I'm wrong, but I do believe Bitwise is one of the first firms to really push crypto ETFs and ETPs into mainstream finance. So I guess my question would be, why do you think the ETF wrapper has been such a game changer for Bitcoin adoption? Is it letting people in TradFi kind of dip their pool into or their foot into the Bitcoin waters without going full on in, or what are your thoughts?
I think Bitcoin ETFs actually supercharged adoption, especially in the US, right? Because I mean, the US economy is hyper financialized, right? I think many retail households, I mean, 50%, so half of retail households, they own financial securities, right? Like stocks, bonds, and so on. So that's very high ownership of financial assets in general in the US. And compare that to the retail adoption pre-ETF approval, so pre-January 2024, it was lower than 20%, right? But I think with the ETF approval in 2024, what you've seen is like the adoption was supercharged because you're suddenly opening up that gate to all these retail households that own like every second household holds any kind of financial asset, right? So you're opening up these gates, and suddenly they have simple access to Bitcoin via an ETF through their traditional brokerage accounts. So that's why I think it will supercharge adoption because that 20% adoption rate, retail adoption rate, suddenly converges towards 50%, which is like the average stock ownership rate, right, per household. So
Yeah.
I think, yeah, definitely supercharged adoption.
Yeah, it's really been incredible just this year to see how fast things are moving and how supercharged things have been, despite the fact we're not going parabolic percentage-wise in price the same way. But we're at 6 digits now, and you told me 10 years ago there's no way I would have thought we'd be at this point in Bitcoin's journey now. But here we are. And it seems to be that everybody is getting on board at this point. I mean, Harvard, for instance, their endowment fund now owns more Bitcoin ETFs than they do gold, which begs the question that do you see university endowments, pensions, and other slow-moving giants as kind of the next big wave of adoption for Bitwise products?
I think so. I mean, we talked about this previously. I think as Bitcoin is becoming a mainstream asset, it will end up in every portfolio eventually. So it will be in pension funds, it will be in 401ks, right? We've just seen the executive order that's actually enabling this. It will be in hedge funds, traditional hedge funds, crypto hedge funds, family office portfolios, and so on. So, and there's definitely a case for it because, I mean, the era of easy money, what it has done is actually it compressed all kinds of expected returns. So it increased valuations. Like if you look at the valuation of the S&P 500, it's at like all-time record, right? Across the multiple of
Right.
valuation metrics, right? If you look at PEs or price to book or anything, it's like all-time record. So that's like a consequence of easy money, right? And I think there's definitely a case for pension funds and others, like asset managers in general, to diversify because like record valuations on the flip side mean you have very low expected returns. I think based on our projections, I mean, you can look at others like Goldman as well. It's in the low single digits per year performance in nominal terms over the next 10 years, right? Like 3 to
Mm-hmm.
4% nominal. But what is like the average inflation rate per year going to be over the next 10 years? Nobody knows. There's high uncertainty because I mean we can talk about like the prospects for US monetary policy, but in my view, I think we're probably looking at an era of like deeply negative real rates again, right? Because if inflation really starts to re-accelerate, but the next Fed chair will be like a super dove and keep rates low or even lower, right? That means ultimately means you'll have deeply negative real rates. And so that's like a new kind of era of financial repression. So we're probably moving towards this kind of scenario again, right? And what's benefiting the most from financial repression, right, is hard assets like Bitcoin, like gold, and so on.
Yeah. And we are in this new era right now. And I think that goes you could kind of spin that a lot of different ways. But the way I'm thinking about it right now is for Bitcoin, we're at this place where I think there's a lot of retail that is apprehensive to buying into Bitcoin, aside from the ETFs, but buying into Bitcoin directly, because we're at this 6-digit price that seems really high right now. A lot of people are feeling, I already missed the boat, right? It's too late for me. So I'm talking, family offices, even some high net worth clients. At Bitwise, or someone who works at Bitwise, what do you think the pitch is for adding a slice of Bitcoin to someone's portfolio today, especially when that price was as high as 124 just a week or two ago, and now we're down to 110? What would you tell them?
So it's always about the long-term projects. I mean, if you establish prospects for return prospects, right, for Bitcoin, because if you add a strategic allocation to your portfolio, to your multi-asset portfolio, you'll add it for the long term, right, not for the short term. So if you look at these portfolio studies, I mean, the obvious reasons are it tends to increase your Sharpe ratio, so your risk-adjusted return, which means your portfolio will become more efficient in terms of you will get a higher reward for the same amount of risk, or you will get lower risk for the same amount of reward, right? So it's more efficient. It makes sense to add Bitcoin to your portfolio. So there are definitely economic reasons there, but there are also macro reasons, right? I mean, one of the key macro reasons is it adds diversification, especially with respect to US Treasury bonds. And what we've seen, especially this year in 2025, is like the correlation between US Treasury bonds, the 10-year Treasury bond, and Bitcoin has become the most negative ever. So that's like a highly inverse correlation between Bitcoin and US Treasury bonds, which means if you add Bitcoin to your bond portfolio or multi-asset portfolio that includes bonds, it will diversify, right? Your bond risk. And in general, what we've seen, like even compared to gold, Bitcoin appears to be not only a better diversifier compared to gold with respect to US Treasury bonds, but also it tends to be better downside hedge. Like if you look at any kind of down day for US Treasury bonds, what you see is Bitcoin is up on many more days than gold is, right, on US Treasury down days. So it even outperforms gold in terms of being like a downside hedge for US Treasury bonds. So that's definitely a case for Bitcoin in a traditional portfolio. It's not so much a hedge against like equity downside risk, although we've seen early signs of this during like the Liberation Day crash, right, in April. But like if you look at the full sample, right, Bitcoin price performance, then it tends to be better bond hedge, especially for US Treasury bonds, than an equity hedge.
No, that makes a lot of sense. And to our audience at home, this guy has a PhD in financial history and is the head of research at Bitwise Europe. So listen to him. For the love of God and the love of Satoshi, it will behoove you to do so. So I know we're running out of time here, Andre, but before we go, you have such a robust past and history of knowing financial history and knowing what's happening. And I know you yourself are an educator by the very nature of what you do. And I believe you have a book coming out or something can you tell us a little bit about that? I'm sure there's people in our audience that are listening and like, okay, he's got a PhD in financial history. I should listen to this guy who would be super interested in knowing what your book is about and maybe getting their own copy. Could you tell us a little bit about it?
Yes, of course. So the book is called Exponential Gold. It's also available on Amazon. And it's supposed to be an institutional investor's guide to Bitcoin and crypto assets. And of course, it's catered to an institutional audience, but there's, I think, an interesting chapter about monetary history, of course, and like how the banking system works, which is definitely valuable. And also valuation section about Bitcoin, a section about altcoins, how it actually refers to investing into Bitcoin and vice versa. And Bitcoin, there's also a chapter on Bitcoin treasury companies, the difference between ETPs and self-custody and so on. So it's definitely worth a read.
Yeah, I mean, that sounds like it's hitting on a lot of the most important and prevalent narratives in the Bitcoin space happening right now. So you said that people can check this out on Amazon, then get their copy, or
Yes,
is there a
exactly.
personal website they should go to?
Yes, you can check it out on Amazon. Just look for Exponential Gold. You'll find it.
All right, beautiful. We'll have to make sure to check that out ourselves. And Andre, we do one thing at the end of this show before we let you go, is we are keeping a up-to-date chart of everybody's Bitcoin price predictions for the very end of this year. This is not any kind of financial advice. This is just your thoughts as an expert in this space. What do you think that Bitcoin will be at by the end of 2025? What's your guess? We're going to put it on a board and revisit it next time we have you back on the show. So what are your thoughts? And give us a little bit of
base case is $200K dollars by the end of the year. The reason is, like, from a pure seasonality perspective, Q4 is the strongest performance quarter for Bitcoin. So, I mean, August, September, on the other hand, they're one of the worst month for Bitcoin performance-wise. So there's not much happening in August and September anyway, but like Q4 tends to be the strongest quarter. So I'd expect Bitcoin to rally in Q4. And one of the key reasons is probably the 401k executive order, which is unleashing a huge amount of capital. I mean, if you even take tiny percentages of like the current assets under management in 401ks and other defined contribution plans in the US, like that 12.2 trillion assets in 401ks and other defined contribution plans. And even if you take like 1% of that amount and which is substituted with Bitcoin ETFs, you will end up with $122 billion, which is a significant amount for the whole Bitcoin ETP market globally. It's around 63% of like global Bitcoin ETP assets. And based on historical relationships, like a 1% increase in global Bitcoin ETP AUM, assets under management, is roughly associated with a 1% performance in Bitcoin. So even by a very tiny reallocation of these 401ks and other retirement plans, you'll see that Bitcoin will probably approach 200K. But if you assume that we'll see a continuation of the Fed's rate cutting cycle, even more so, right? So, yeah.
200K. Okay, so that's your base case. Now I want you to give me an exact number. And mind you, we're having other people do this as well. And whoever wins it, I'm sending them a Roxom Patagonia. So we had yesterday, for instance, we had someone try to price us right it. They said $200,001. Do you want to stay at 200K or do you want to revise it to something a little bit different? I don't want you to get trapped.
So official prediction is 200K, but I'd say probably a bit more conservative. I'd say 172.
172, let's mark it on the board, guys. All right, Andre, well, I got to say thank you so much for your time and patience today. It's been an absolute blast having you on the show. We hope to have you back sometime soon because I could talk to you all day. I mean, PhD in financial history, guys. What else do you want? And you came with the numbers to back up your predictions too, which I just love. So thank you so much for your time today. And really quick, before we let you go, do you have a great X account or something we can send our audience to get more of your takes about what's going on in the Bitcoin space?
Yes, sure. You find me on Twitter with @Andre_Dragosh.
Perfect. You guys heard it here first from the doctor himself. Well, Andre, thank you so much for your time today. It's been an absolute pleasure. And it should be dinner time around where you're at in Frankfurt. So I hope you have a great evening.
That's
and
true.
Thank you so much for joining us on the show today. It's been a real pleasure.
Thank you so much. It's been a pleasure. Thank you.
Thank you, Andre. See you again soon. All right, guys, we're going to go to a quick break. But when we're back, more of today's top stories right here on the Blockchain Report. So stay tuned. We'll be back right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this?
This is Bitcoin.
Bitcoin,
It's not just a cat, he's family.
quite a name, and I must say looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Okay, sorry guys, my microphone is off. It's a live show, it happens. All right, well, we're back with more of this morning's bull run. Before we get into it though, special thanks to Andre Dragosh for Bitwise for joining us. Really great to get his insights. And make sure to check out that book of his on Amazon. Get your copy today. All right, well, Donald Trump has officially fired Federal Reserve Governor Lisa Cook. Uh-oh, yeah, that makes him the first president in history to ever remove a sitting Fed governor. And not for bad monetary policy, but for allegedly playing musical chairs with her mortgage forms. Okay. According to Trump, Cook claimed her Michigan property was her primary residence for the next year. Then, just 2 weeks later, she also swore her Georgia property was her primary residence for the next year. Apparently, Lisa Cook thinks primary means whichever house I feel like this week. Must be nice. Now, Trump pointed to a criminal referral dated August 15th of 2025 from William Pulte, director of the Federal Housing Finance Agency, to Attorney General Pamela Bondi. That referral said that Cook may have falsified bank documents and property records to score better loan terms, potentially committing mortgage fraud. In Trump's letter to Cook, he said it was inconceivable that she wasn't aware of her first commitment when she made the second. And he added that it was impossible that she intended to honor both. Or in other words, Lisa, you can't live in Michigan and Georgia at the same time unless you've unlocked teleportation. Trump said the Fed has a tremendous responsibility to set interest rates and regulate banks, and that Americans must have full confidence in the honesty of the people doing that job. Then he dropped the hammer, saying, in light of your deceitful and potentially criminal conduct, they cannot and I do not have such confidence in your integrity. Ouch. Trump said her actions displayed gross negligence in financial transactions and called her competence and trustworthiness into question as a regulator. Then he concluded by ordering her immediate removal from office. Immediate. Not pack your things, not 2 weeks notice. This is more like leave your badge at the desk. The Fed gift shop doesn't validate parking. Cook hasn't been charged with any crime, but the DOJ is investigating the allegations. Trump had already warned on Friday that he would fire her if she didn't resign. He told reporters, I'll fire her if she doesn't resign, which she did was bad. That's about as subtle as a Fed rate hike in the middle of a recession. Under federal law, presidents can only remove a Fed governor for cause, which historically has meant misconduct, not policy disagreements. So Trump's move is certainly unprecedented. It's the first time in history a president has fired a sitting Fed governor, and it could trigger a very bitter legal battle. The firing comes while Trump and his allies continue pushing the Fed to cut interest rates to juice the economy and make the $37 trillion U.S. national debt a little less horrifying. Trump has previously threatened to fire Fed Chair Jerome Powell, but never actually followed through. Lisa Cook, however, well, she wasn't so lucky. She was appointed by President Joe Biden back in 2022. She was confirmed by the Senate in 2023 on a razor-thin 51-47 party line vote. Her term was supposed to last 14 years, from 2024 to 2038. Instead, it lasted until August 25th of 2025, when Trump told her that she was out. Now, Fox Business reached out to the Fed for comment. So far, crickets. And here's the Bitcoin angle about all this. While the Fed is busy playing soap opera with mortgage fraud and governors getting fired, Bitcoin is just sitting there, doing what it always does, being honest with math with a fixed supply. Because Bitcoin doesn't sign 2 mortgage forms, Bitcoin doesn't need a primary residence, Bitcoin doesn't get investigated by the DOJ, and Bitcoin doesn't get fired on a Monday morning by Donald Trump. God bless it. And in other news about Bitcoin, it's no longer just the rebellious kid at the Fiat family reunion. It now officially makes up 1.7% of the entire global money supply. Now, according to Rivers analysis, Bitcoin's market capitalization is currently at about $2.29 trillion. That number is stacked against a global basket of $138 trillion, made up of major fiat currencies and gold. 16 years ago, Bitcoin didn't even exist. Today, it's eating a measurable slice of the monetary pie. At its peak earlier this month, Bitcoin's valuation hit over $2.4 trillion, giving it the full 1.7% share. Now it's closer to 1.66%, still small compared to state currencies, but miles away from the zero that it started with. Now, Rivers' methodology here, they aggregated the M2 money supplies of major world currencies and combined that with the value of physical gold. They deliberately excluded silver, platinum, and palladium because nothing ruins a good statistic like industrial metals crashing the party. The context is quite clear. Fiat dilution is fueling Bitcoin's rise. The erosion of purchasing power in traditional currencies is making limited issue assets like Bitcoin more and more attractive. Bitcoin, originally conceived as a response to the 2008 financial crisis, is now slowly integrating into the major asset class spectrum, and we're here for it. And Jerome Powell, well, he unintentionally gave it a little push over at Jackson Hole last week. During his speech, he announced that the Fed's policy rate is now 100 basis points closer to neutral than it was a year ago. He added that the stability of the unemployment rate and labor market allows them to proceed cautiously in adjusting monetary stance. Markets immediately took it as a hint of a coming Fed rate cut. CME data shows that 75% of investors now expect a 25 basis point cut as early as this September. The reaction in Bitcoin, well, a 2% spike within hours, peaking around 116K. So here's what we've got. Bitcoin is now officially 1.7% of the entire global money supply. It reacts to Fed pivots the same way gold and tech stocks do. Except, unlike gold and tech, it has a hard cap and no quarterly earnings calls. Call it a hybrid, a store of value, liquidity-sensitive asset, and middle finger to fiat all rolled into once. And Morgan Stanley's back at it, since Bitcoin has blown past 100K in recent months. Spot ETFs have stacked up $53.7 billion, and corporations are literally putting Bitcoin on their balance sheets. And Morgan Stanley's summer interns, well, they're still acting like it's Farmville credits. The bank surveyed over 500 interns in North America and another 147 in Europe. Only 18% of them own or actually use crypto. That's up from 13% last year, however, so technically adoption grew, but let's be honest, that's like saying Blockbuster was growing when it opened one store back in 2010. Another 26% say that they're interested, which basically means I'll ask my manager about it once I'm a full-time employee. Meanwhile, 55% flat out don't care. That's a majority, even though Bitcoin is trading six figures and Ethereum touched $4,800 again this past weekend. We are, as the kids say, still very early. Crypto Twitter's favorite phrase has never looked more accurate, because when the future of an analyst at Morgan Stanley, literal interns swimming in ETFs and Wall Street memos still shrug at Bitcoin, then yeah, that means we're definitely still early. Now, what do they actually care about? Well, the answer is AI. 96% of US interns and 91% of Europeans say that they already use it. Basically, all of them agree it saves time and is easy to use, but 88% also admit it still needs accuracy improvements. Or in other words, they love ChatGPT, but they're tired of it confusing Argentina with Ariana Grande. Now, this lines up perfectly with Wall Street's current obsession. The Mag 7 firms are expected to spend $650 billion this year on AI capital expenditures and research and development. $650 billion. That's not a budget. That's Skynet's GoFundMe page, okay? And the interns don't just want AI tools, they want humanoid robots. 60% of US interns and 69% of Europeans said they'd like one at home, which is adorable until you remember they also think humanoids will take jobs and maybe ruin society for all of us. Only 36% of US interns and 24% of Europeans said robots will actually be good for humanity. So let me get this straight. Basically, they want the Terminator living in their apartment, but they're also pretty sure it's going to end civilization. Okay. Morgan Stanley estimates that the humanoid market could hit $5 trillion by 2050 with over 1 billion robots in circulation, 90% of them used for industry and commerce. I've seen how this movie plays out. It's called iRobot. It stars Will Smith, and it's not great. So let's be careful here, gang. And let's add up everything that's going on here in this story here really quick, shall we? Interns don't own Bitcoin, but they do worship AI. And they also want robots that they also believe will destroy society. I think the future of society is in great hands. So do you, right? Yeah, of course you do. And Eric Trump is back on the mic, and apparently Bitcoin is going straight to $1 million. At the SALT conference in Jackson Hole, Eric Trump declared there is no question in the world that one BTC will eventually hit seven figures. Which, coming from Eric Trump, is basically the crypto equivalent of your buddy at the bar yelling, "Trust me, bro, Bitcoin's going to $1 million." Now, in the meantime, he's setting the short-term bar at 175K by the end of this year. So let's put him on the chart too, guys. So yeah, Eric Trump's end-of-year target is higher than most Wall Street banks' 5-year forecasts. Great. He first dropped his $1 million bomb back in December, calling Bitcoin a fundamental shift in the way that we think about money. And because Eric can't resist humble bragging, he added that Bitcoin has changed how he manages his company's treasury and how he accepts payments. Then things got a little personal. He said, "I can trade Bitcoin at midnight on Saturday while having dinner with my wife, because nothing says marital bliss like checking your BlockFi account between bites of filet mignon." He praised Bitcoin's censorship resistance, fixed supply, instant liquidity, and lack of intermediaries, and low barrier to entry. Basically, he just read off Bitcoin's Tinder profile. And he insists most people don't see Bitcoin's potential yet. But eyes are going to be open when Bitcoin hits $1 million, he said. He compared it to email and SMS. Slow at first, then suddenly everyone's using it. And this isn't just theoretical. The Trump family has gone full degen over the past year. In October, they launched World Liberty Financial, the DeFi project with its own stablecoin. In January of this year, Donald and Melania dropped their own meme coins. Those were fun. In March, Eric announced American Bitcoin, a mining firm that he co-owns with Donald Trump Jr. And just last month, Trump Media Technology Group bought $2 billion worth of Bitcoin while filing to launch a blue chip crypto ETF. So yeah, the family that brought you golden elevators and 4 bankrupt casinos is now running a stablecoin, a mining firm, and a Bitcoin ETF. Eric even admitted why they pivoted, saying, "You know why the Trump family got into crypto, right? They deplatformed us," he told Fox Business. Or in other words, JP Morgan doesn't like dad's red hat, so now we're holding sats. Of course, critics are pointing out the glaring conflict of interest here. President Trump is pushing pro-crypto legislation while his family's crypto ventures are already pumping his net worth by over $620 million, according to Bloomberg. So when Eric Trump says Bitcoin's going to $1 million, is it conviction or is it a pump and a family dump? Either way, it's very much peak Trump. That was fun and it rhymed. Moving on to the next story, and we're still in the Trump clan because meanwhile, Donald Trump Jr. is officially placing his bets literally. His venture capital firm, 1789 Capital, just dropped tens of millions of dollars into Polymarket, the billion-dollar prediction market where people wager on everything from elections to the Oscars. He's not just bringing the cash, he's also snagging a seat on the advisory board. The twist, though? Trump Jr. is already an advisor to Kalshi, Polymarket's biggest rival. So he's basically the Gordon Ramsay of prediction markets, screaming in two kitchens at once. Now, after months of backroom talks and now a regulatory green light, Polymarket grabbed a CFTC license exchange to crack into U.S. markets. If you thought betting on politics was messy before, buckle up. The House just got a lot more Trump. All right, we're taking a break, but when we're back, we got more blockchain report coming at you with more of today's top news, so stay put. We'll see you in just a sec.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
revisiting the numbers in this morning's second market rundown because things have been moving and we want to keep you up to breast as what's going on here. Bitcoin now below that 110K level. Like we mentioned earlier in the show after our talk with Stephen Orr, Mr. Big Beat himself yesterday, that 110.5 mark seemed to be the floor that we were anticipating a bounce on. We've seen numerous bounces at that level, but right now we've broken through that floor, which could signal some downside in the near term. So we're going to be watching that. Ethereum, though, hanging out a little bit better. Not a ton of movement this morning, still sitting around that mid $4,500 level. XRP also the same, up 3% in the last 24 hours, currently sitting at 294 or 295 per coin. Cardano right now up about 2% on the day at about 85, 86 cents a pop. And lastly, we got Dogecoin at about 21 cents, doing a whole lot of nothing. I'll never understand what that dog coin does. In TradFi, we didn't get to it earlier today. Let's see what's moving and shaking there. Dow Jones, not doing a lot this morning, currently sitting at about 45,300-ish. Same can be said for NASDAQ, up 50 points on the day, really a modest gain. It's like 0.25%. S&P 5, not doing much either, sitting pat right around 64, 6,500. Tesla today, standing pat at about 346, 347. Strategy's up almost a half a percentage point this morning, so Michael Saylor's got to be happy about that. Coinbase sitting tight around 304. Nvidia up about $1.50, and GameStop kind of hanging out around $22, $23. It's been doing that for a while now after it had those disappointing earnings call a couple of weeks ago, so not a lot of action there. What's coming up now is we have a particularly fun story to go over, so let's switch over to camera one and do it, guys. All right, so you've heard of financial advisors before. Sure you have. We talk about them all the time. And you've probably heard about family offices before. We actually talked about those briefly today too. But let me now introduce you to the hottest new trend in wealth management. Are you ready for it? It's psychics. Yeah, weird. According to the Wall Street Journal, billionaire heiress Taylor Thompson lost more than $80 million in crypto after letting a celebrity psychic and her former best friend help with her portfolio. You see, during the 2021 bull run, her friend Ashley Richardson managed over $140 million in crypto across multiple wallets. That's right. She basically handed her fortune over to someone who thought horoscopes could outtrade hedge funds. Okay. Then came the 2022 downturn. Now, Guidepost Solutions estimates that Thompson lost around $80 million thanks to more than 450,000 trades that Richardson executed without proper authorization. 450,000 trades. That's so many. Nothing says, though, financial prudence quite like 500,000 trades blessed by a crystal ball, so we get it. Now, Richardson denies any wrongdoing here, saying she only acted on Thompson's instructions and never profited herself. Sure. She claims the risky trades were necessary to manage liquidity in thinly traded tokens, because nothing screams sound strategy quite like YOLOing liquidity management in microcap coins. Of course, this all turned into lawsuits, predictably. Thompson sued Richardson and Persistence, the blockchain behind the XPRT token. She had sunk $40 million into XPRT back in 2021 when it traded at around $16.59. Today, what is it worth? 3 cents. That's an over 99% collapse for those of you doing the maths at home. The only thing that vanished faster was their friendship, also pretty predictable. Thompson alleges Richardson cut a secret finder's fee deal with Persistence. Richardson countersued for $10 million, claiming defamation because, the only way to mend a broken trust like that is to sue your billionaire bestie. Good luck with that. Now, they've since settled with Persistence, but the case against Richardson is still very much alive. So I guess the moral of the story here is when it comes to crypto investing, maybe call an analyst before you end up calling a psychic. Victor, I want to talk to you about this one here. Do you think you'd ever listen to a psychic advisor to handle your investments? No? Depends on what kind, right? If it was real money stuff, not so much. But if they were to say, hey, place $20 on the Bears winning the Super Bowl this year, I might buy into that because, I want to believe. I want to believe. Are you really into psychics, though? Do you think there's any merit to those things?
I'm not, but at the same time, I'm too scared, to like go up to someone and like tell me my fortune. So,
Right. Yeah, because
so
what
there's
if it's bad?
a little bit of credibility, like, because I'm scared to talk, to someone or have them read my cards or not. But at the end of the day, no.
Yeah, it's hard. Part of me wants to believe, right? We live in such a big world. There's 8 billion people out there. You hear stuff now online all the time, and with AI, it's become even harder to distinguish between what's real and what's a bunch of BS. But I gotta believe there's some people out there that have some kind of uncanny abilities, or I don't know, that are in tune with things that we're just not. Like, the world is too big for me to realistically be like, it's impossible. Like, you gotta leave that sliver open a little bit. Aliens, for instance, man. We're seeing stuff all the time. They gotta be out there. It's a huge world. But,
Yeah. But I mean, you think if these psychics have like any sort of ability to do that, wouldn't they just invest themselves?
Right, like why aren't they buying lotto tickets or something?
Right.
I don't know. My mom and sister are all about them. I have gone to way too many psychic readings that they like dragged me to. And they're always like, they knew things I could never know. But I think some people just have that ability to kind of pick up things on people in a certain way. They're just more attuned with like
The way they
certain
question
frequencies,
you and kind of like, you kind of tell them what you're dealing with, right? Or what you want to
Right, and and with the interwebs too, man, I question everybody. You can get information on almost anybody so fast. It's harder to stay off the internet than it is to be on it at this point, right? Like, it's hard to scrub yourself from it, and people can just look it up right away. But
Yeah. Well,
I don't
we
think
both wouldn't
Yeah, go
talk
ahead.
to psychics about, investing, but you brought AI. Would you do that? Would you ask AI to give you
Yeah.
advice?
Yeah, because I think it's tough, right? I mean, we're still at a point where AI is not infallible. We see it plenty of times with ChatGPT will screw up. But what is a really good investment advisor, right? It's somebody's ability to synthesize tons of data over certain amounts of time to predict how the future might react, and then finding instances, kind of like when we were talking to Mark Moss the other day. He said he does a lot of history, research into financial history, because there are patterns. And that is very true, and you can look into that. It's a very real thing. So if I can have this machine look at vast quantities of data really quickly and find those patterns, yeah. And I think they've had AI trading algorithms that have done pretty well in the market. But then I also worry what happens when AI turns against us, Skynet, and then is he just gonna screw me over intentionally? I don't know. I mean, I guess AI has no use for money, right? They're robots.
I mean,
So I don't know.
they'll find a way. Oh, they'll find a way to make
Yeah.
someone, not you, make more money.
Well, they're already saying that it's likely that the first person out there who will start a one-man company that's worth $1 billion is probably already out there somewhere, very much because of AI, which is great, but also terrible. We're taking all these jobs, but it does in a way empower people that we've never seen before to, change the world, to provide value to the world and themselves. So there's a good part and there's a bad part, and we're just in that middle part right now before Skynet happens. So hopefully we can stretch that out for a while. We're in the good part right now, I think. So I don't know. All right, I need to take a break. When we're back, though, more blockchain report coming up, including bullish, bearish, or BS, where we break down the top stories of the day. All that and a little bit more right when we're back. Stay tuned. Love the stinger for that one. The music's so fun. But welcome back to Blockchain Without Borders, where we see what's going on in other parts of the world. Well, the Philippines, is looking at its $285 billion debt problem and saying, you know what might fix this? Bitcoin. Representative Miguel Luis Villafuerte has introduced the Strategic Bitcoin Reserve Act. The bill orders the Banco Central Filipinas to purchase 2,000 Bitcoin every year for the next 5 years. That's a total of over 10,000 Bitcoin. And once they've bought it, the coins go straight into a government-run reserve vault that can't be touched for 20 years. Not 10 or 15, 20. The rules are kind of brutal. The only time the government can sell is if the proceeds are used to pay down the national debt. After the 20 years are up, even then, the central bank governor can unload more than 10% in any 2-year period. This is less a reserve and more of a digital chastity belt, if you will. Villafuerte modeled the bill after commodity-style reserves like the U.S. Strategic Petroleum Reserve or Canada's maple syrup stockpile. Yeah, they got a whole stockpile up there. Apparently, the Philippines looked at pancakes and said, how cool, now let's do it with Bitcoin. The Bureau of the Treasury reported earlier this year that national debt had reached $285 billion, equal to 60% of the country's GDP. So now, Bitcoin is being positioned as a sovereign-level asset alongside oil, syrup, and grain. To secure it, the bill mandates geographically dispersed cold storage facilities, quarterly audits, public cryptographic attestations, independent third-party verification, because nothing inspires confidence quite like a government trying to prove they didn't fat finger a seed phrase. And forks and airdrops, those have to be retained for at least 5 years. Meaning, yes, if some garbage fork coin shows up in the Philippines wallet, they are legally required to hodl it. Now, most importantly, private Bitcoin ownership stays untouched. The bill explicitly states that citizens' crypto won't be confiscated. This is about the government stacking its own bag, not raiding yours. Villafuerte's justification is straight from the bill. The state shall promote and maintain economic prowess, including monetary stability and the convertibility of the peso, especially in times of crises. With the increasing role of cryptocurrency in the world's financial system, it is imperative to enact measures aimed at diversifying our assets to ensure financial security. Or translation, the peso's not looking too hot, so we're buying Bitcoin. Good job, Philippines. We're glad you're getting on board the train. All right, we got some AIO coming up. Let's run the stinger, boys. AI stinger today, Bueller? Yeah, thank you. All right, we're back. Let's see what the robots are up to. Kraken looks like they've gone shopping again. This time they're buying Israeli startup Capitalize.ai, which is a no-code platform that turns your random sentences into actual trades. Type, for instance, buy Bitcoin if it drops below 110K, and boom, it's live. There's no coding, no spreadsheets, no chance to blame fat fingers when you sell your entire bag by accident. Now, the actual price of it, the whole thing here, the merger, wasn't disclosed, but Kraken says the tech will roll into Kraken Pro later this year. Capitalize.ai launched in 2015 and built a system that takes everyday text, converts it into a trading strategy, and executes it across multiple markets: equities, crypto, forex, futures, and options. Once integrated, Kraken Pro users will be able to design, backtest, and automate trades without knowing a single line of code. Kraken's head of exchange, Shannon Kurtas, said the acquisition gives clients a new way to act on ideas in real time. Or in other words, now your uncle who thinks NFT is a sports league can program a trading bot before dinner. This isn't Kraken's first shopping spree either. You see, back in March, they bought NinjaTrader, a U.S. futures platform, for $1.5 billion. And they're far from alone. The crypto industry is hoarding AI startups like it's Costco on Black Friday. In January, Chainalyst dropped $150 million on Altera, an AI fraud detection startup with real-time monitoring for banks and regulators. Later that month, Web3 super app Xportal bought German startup AlphaLink for its AI-driven mobile interfaces. By August, things got a little spicy this month. Tether and video platform Rumble teamed up on a $1.17 billion bid to buy Northern Data, a German high-performance AI company. That deal would give them GPU clouds, data centers, and let's be honest, the creepiest joint venture imaginable. Now, that same day, Bitcoin miner Mara Holdings bought 64% of French AI firm Exaon for $168 million. Now, Exaon is a subsidiary of a state-owned EDF, partners with NVIDIA and Deloitte, and comes with the option for Mara to up its stake to 75% by 2027. Meanwhile, Coinbase decided not to buy anyone and instead partnered with Perplexity AI in July, plugging its Coin 50 index into Perplexity's engine. Because when you ask what's Bitcoin doing, you want the answer with AI flair. So here's the scoreboard here, gang. Kraken, Chainalyst, Tether, Mara, all buying AI companies. Coinbase, outsourcing the homework. Moral of the story here, though, is if you're running an AI startup, your exit plan is either get acquired by crypto or pivot into therapy for altcoin bag holders. All right, we're taking a break, but when we're back, we're going to wrap up today's show with a little bit of bullish, bearish, or BS, so stay tuned. We'll be right back.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
We're back with a little bullish, bearish, or BS. This is the part of the show where we recap today's top stories and decide if they're looking good, bad, or otherwise for our beloved Bitcoin. Let's get started. First up, Morgan Stanley says Jerome Powell's soft new tone on jobs means the Fed could cut rates as soon as September, with 2 cuts this year and more likely through 2026. Traders now see an 81.9% chance of a September rate cut. I mean, I'm gotta be bullish on this, right, gang? I mean, cheaper money always lights a fire under Bitcoin because nothing says buy a deflationary asset quite like the Fed admitting fiat is about to get watered down again. Expect some volatility in the short term, but in the long run, this is rocket fuel for Orange Coin, baby, so I'm bullish. Next up, we got President Trump became the first president in history to fire a sitting Federal Reserve governor, alleging that Lisa Cook lied about having 2 primary residences. The DOJ is investigating the matter, and the move could spark a legal battle. Ooh, on this, I am bullish. Here's why. Because chaos in the Fed only highlights the beauty of Bitcoin. It doesn't commit mortgage fraud, it doesn't get fired, and it doesn't play politics. The more the Fed looks like a soap opera, the better Bitcoin looks as hard money. Because Fed chaos equals more reasons to trust Bitcoin instead of them. So I'm bullish on that. So we got 2 bullish, 0 bearish, 0 BS, 1 more to go. Last up, Rivers Analyst shows that Bitcoin's market cap has hit $2.29 trillion, giving it 1.7% of the global money supply. 16 years ago, Bitcoin didn't even exist. So how do I feel about that? I'm bullish, of course. This is the quiet revolution in real time. from 0 to 1.7% of all global money in 16 years, and that's before most institutions even finished dipping their toes into the orange pool. Imagine what happens when that number hits 5 or even 10%. Things are about to get wild, baby. So, today's score, 3 bullish, 0 bearish, 0 bearish, which means today is definitively bullish. I'm bringing out the money gun. Rate cuts mean cheap money is coming back into town. Trump is turning the Fed into a political soap opera that only highlights why Bitcoin is incorruptible. And the fact that Bitcoin now makes up 1.7% of the global money supply proves again it's gone from fringe internet toy to a real slice of today's monetary pie. We've put it all together for you, and you've got the perfect storm. Fiat is about to get weaker, the Fed looks shakier, and Bitcoin looks stronger. If that's not bullish, gang, then I don't know what is. As always, thanks again for tuning into the Blockchain Report. We're here Mondays at 10 a.m. and Tuesdays through Fridays at 8 a.m. Pacific time. And before we let you go, make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on all the platforms you choose to doom scroll on. And I'll see you dudes and dudettes tomorrow. And until then, cowabunga, sayonara.
Security matters. Zappo Bank, the only way to bank your Bitcoin.